Adrian says, "Hey, Robert and Austin. First off, thank you so much for all the time and energy you guys put into this podcast. My dad is getting close to his retirement age. I'm in my early 30s, and your show has brought so many great conversations between him and I. We love listening and talking about the takeaways we have from it. It's been a great resource for the both of us and has added a new dynamic to our father-daughter relationship. So thanks for that. Here's my question. My husband and I own a business. We set aside a percentage of our revenue each month for tax purposes. At the end of this year, we will have $35,000 set aside for taxes. After visiting with my tax preparer, we will only need to have about $21,000 set aside for taxes. Knowing this, should a high-yield savings account still be the way that we park this money? Or, since there's a decent margin of about $14,000 here, should we invest that instead into the S&P 500 or the NASDAQ, where if we did see some losses, we'd be able to absorb that pretty well? We have some good working capital, we have a good nest egg, and we have a line of credit needed for the business if it's necessary. We're in our early 30s. We have $56,000 invested in our base accounts for retirement with another $120,000 in rental home equity. Thank you so much for your insights. Robert, you want to kick this one off?
Yeah, I do. I love the fact that you guys are thinking ahead and doing it right, putting aside the taxes necessary, because too many small business owners go through the year, they're spending the money like it's theirs. They're not setting this money aside for repairs or new equipment or taxes or all the things that come along with running a small business. I do like that you're doing that, but I don't know that I would let it just sit in the high yield savings. I like the fact that you're doing that. But I would say any overage that you have above and beyond the taxes that you set aside, but also the money you have. So you have a cash reserve. I don't know what yours is in your business. Maybe it's 2-3 months of expenses that I would love to see that into those ETFs and index funds that we talk about, like VOO and QQQ, because you want to maximize your gains. And always remember and look at it that if it's in a traditional brokerage account, you can take that money anytime you want out of that account and use it if you need it. So we're just always here to give you as much of a blueprint as we can of how we handle our money with all of our small businesses to make sure that it's not just sitting around either in a checking account or in a high yield savings account. I see so many business owners that I'll go through things with them and they'll be like, yeah, I have 180,000 sitting in my cash account. And I'm like, why? Well, in case for a rainy day. Well, the rainy day can still be a traditional brokerage account, a high yield savings account. It could be in crypto, somewhere else where you're earning more rather than just letting it sit there. So love where your head's at. I would get that money invested, especially the overage, as long as you have enough cash on hand for the day-to-day business expenses for a couple, 2-3 months.
My personal experience with this is I pay hundreds of thousands of dollars a year in taxes. Right now, I think I've got 175,000 sitting in a high yield savings account that I have to pay to the IRS. I earn a couple $100 a month on it. It's kind of cool. I am not investing that because I know I owe that money, right? But if it was materially higher than what I knew I owed, then that difference, yeah, I probably would invest it. So in your situation of this $14,000 difference, yeah, I mean, if you want to take 10,000 of that 14 and say, I trust my tax preparer. I think I can project where our business will be by the end of the year. Therefore, I'm going to take $10,000 that we had set aside for taxes, make sure that I'm doing all the right things with that from a, owing taxes on that money perspective, and then realize it as, personal income so you can go invest it or do whatever you want with it. Totally cool with me. But the problems that people get into is, one, they don't save enough for taxes. And so it's like a whole headache at the end of the year. Or two, maybe they invest all of the tax savings they had, which if I had done that during, I had to obviously pay the IRS in April. Well, in April, the Trump tariff tantrum happened and the markets went down by 20%. So that would have been a terrible timing. Just know this. You don't have to perfectly optimize every last penny of your entire life. It doesn't have to be so perfectly perfect where it's the most perfect thing in this perfect world. That's no one's reality, right? We're all going to leave money on the table some way, somehow, somewhere. But by having it in a high yield savings account, by being strategic with, how often you deploy it and all those different things, that's how you can make a best judgment, educated guess as to what to do. In hindsight, it's always 2020. We're always going to have done something different. But by making sure it's at least working for you with a high yield savings account, like you're covering your bases and you should feel good about that.